For his take on the broader commodities market, in particular alumina. Peter O'Connor from Shaw and Partners joining us now. Peter, good to talk to you again. So there has been a lot of movements in the alumina market along with nickel. We'll get to that in a moment. But just as far as alumina, aluminium, bauxite, a lot of this was the talk of what went on, of course, in Guinea being a major supplier. But there's more to it than just that.
Yeah, look, it's been a busy week again, and I say that every week when I come on, and it's good to be back. So in the last month, there's been 3 events in the alumina market. So the most recent one was last week, which was a coup in Guinea, which was the more topical and probably got the most airplay of all the events. But there were 2 others prior to that, one in Brazil, which affected supply, but also one about 2 weeks before in Jamaica. And each of those events, small in the scheme of things, but they've all built up to a position where supply security is starting to be questioned in the market that feeds into the aluminium market. So that's the chain, which includes alumina, but also bauxite, the raw material it's mined in the likes of Guinea. And that basically came to a head last week with the alumina price spiking quite sharply, almost up 30% over the space of about 2 weeks. And the backdrop from here continues to look like it will be supportive given some of that supply won't come back on quickly. So the alumina market, which has been grinding higher from a post-COVID low in March last year, it was making time and making headway, but it's certainly moved ahead now. And we met up with the company Alumina Limited on Friday with their management team, and they gave us their view on the outlook, which was remarkably positive. Sorry, I shouldn't say remarkably, given the backdrop, but uncharacteristically, they're more conservative about the outlook. But this time they were quite clear that the alumina price outlook, the commodity price, looks like it will stay higher longer. And that means higher earnings, and earnings could be as much as 2 times higher than the current market forecast into next year. That's calendar year 22. So commodities moving, supplies tight, price likely to stay higher for longer, and earnings likely higher as well, which means share prices higher from here, despite the moves they've had over the last week.
All right. I did mention nickel. We'll just go through that briefly, a bit shorter time, but did hit or has hit 7-year highs. What's driving that at the moment?
Everybody likes to pin it to the EV thematic, the decarbonisation, electrification, because that's just the cliche to use of the day. But really, it's about just the basic stuff. It's about stainless steel. Stainless steel's where about 70% of nickel goes to now and probably in the future. So it's not that sexy part of the market, but it's the key driver of nickel demand, and that's been strong. Like steel globally, the numbers are high, and stainless steel price continues to push higher as well, which drags nickel higher as well. So the underlying supply right now is really about stainless steel, and the nickel feed into that. Yes, there is an element of the electrification story without doubt, and that's probably the longer term thematic. But right now, it's just about what China's doing in steel making, and therefore stainless steel, which is feeding into the property market there. So that's well supported in the short term, and the EV thematic will keep it going in the medium to longer term.
All right, Peter, and just finally, gold. Look, I know you've said this before. You see that sector as cheap, given where the gold price is at the moment. In fact, some of those equities, they're at year lows, aren't they?
They are. Gold, we've always got to look for where do we go next? Where's the next game? Where's the next story? And it's in gold. Alumina is a great story. I just talked about coal. We've talked about before as well. Iron ore's been a great story, but gold is where the action will be from here. Why? Because gold equities are cheap. Gold price is cheap. Gold price should be at least 10% higher than where it's trading today, based on historical correlations to real interest rates. So, and gold equities are levered about 2 to 3 times to the gold price. So when we get that slightest tailwind, gold equities will move. And as you mentioned, the bulk of our big cap gold names, quality companies with good operational and financial outlooks, are trading at 52-week lows. It's extraordinary. So, and it's not just an Australian phenomenon, it's global as well. So the sector has been shunned from a gold commodity perspective and also equities. So there's going to be some movement there. I thought the trigger was the payroll data in the US about a week ago. It wasn't, but watching closely that space, and that's the cheapest equities in my coverage universe. So a place to be focusing on buying value for sure.
Any particular standouts you're looking at the moment?
Good question. At the big end, so the senior end, Newcrest looks great. Fantastic drilling results last week. They do a 6-weekly update, and the numbers were just extraordinary, what they're reporting from both their WA prospect as well as in North America. So that looks well supported, trading at just on $24 to $25 a share. My valuation is about $34 per share and a price target closer to 40. So that's a standout at the big end of the market. At the smaller mid-cap end, I really like what Regis are doing. There comes some potential developments with a new project. And the really cheap one, that's if they can make things fit together, Zimbabwe. Zimbabwe looks extraordinarily cheap. It's trading about half its fair value. And if they can piece together the story they're starting to map out to the market, that would be the go-to stock. So that'd be my picks at the big end and the mid-smaller end as well.
All right, some good picks. And I guess, Peter, if you don't want to go for an individual stock, there's always an ETF that will get you through. Hey, thanks for joining us at Shaw and Partners.
Yes, just diversify the portfolio.
Thanks, mate.
Thank you.
Cheers.